Hello, welcome to chapter 4 homework. We're going to do some multiple choice here in the first part that I'm not actually going to do. Which financial statement is prepared last? No, this is okay. Of these three, the balance sheet, all right, is the last one we're going to do. Goes income statement, statement about balance sheet. There is the statement of cash flow, which is what we really do last, but we're not going to talk about the statement of cash flow in this course, all right? So I threw you a freebie. Normally I don't do the multiple choice, but figure I'd help you out. For each account listed, identify the category in which it would appear on a classified balance sheet. So we're looking as to whether or not it's going to be a current asset, current liability, property, plant, and equipment, long-term liability, etc. All right. So let's look and see what we got. Supplies. I'm saying it's going to be a current asset. It's good to copyright since we don't cover that in this course. So you'll probably be curious. It's going to be an intangible asset. This one's a little trickier one too. Land held for long-term investment is going to be a long-term investment. Notes payable due in years would be long-term liabilities. You should know unearned revenue, accumulated depreciation, land, faster capital, and interest payable. Those should all be, I'll give you the interest payable. That should be a liability. Okay, so we'll check the ones I got. Looks like I got all the ones that I did correct. You can do those last four. Okay, next one. Is this account a temporary account or permanent account? Remember, everything that's on the balance sheet is permanent. Everything else is temporary. So if it's a revenue or an expense, it's temporary. If it's the accounts, the capital withdrawals, it's temporary. If it's the income summary, which I don't see up there, it's temporary. Everything else is permanent. Okay. So let's look. I'll do a few. Rent expense, temporary. Okay. Prepaid rent, permanent, because that's prepaid. Remember, that's our buzzword. That's an asset. All right. There's no unearned up here. So unearned is a liability. That would be a permanent account. All right. What about Munster withdrawals? Munster, I just realized that's the Munsters. If you ever watched that old TV show, probably not because it's black and white. You guys probably don't know. But anyway, withdrawals is a temporary account, but the capital itself is permanent. So I don't see, okay, payable, that's a liability, so that's permanent. What else? You should know equipment, that's an asset. Revenue, service revenue, so revenue, supplies, expenses, and expense supplies is an asset. So I'm giving you those, you should know how those work, okay? All the ones I did are correct. And let's do this last one. Probably going to be doing some financial statements. Ryan, why do you always make us do financial statements? Well, it's because you're going to do them on the exam, so you need to be ready for it. Income statement. We start off with revenues. We're going to put here what our revenues are. I'm going to guess because I kind of know. Service revenue. It's like the only one they ever do. So here's our adjusted trial balance. All right. And guys, I'm telling you, if you listen to me on how to do this, look, your income statement, all the information is right here. That's your income statement. Then the net income derived from that plus these two is your statement of owner's equity or statement of owner's capital. And then the rest is your freaking balance sheet. If you just do it that way, you're going to get it right every time. So we're going to come over here. I'm going to put 42.5 because that's our revenue. And then I'm just going to go down the expenses and I'll fill in what they are in a minute so I can move them. Let's see, did they give us extra line? Looks like they did. Don't let that fool you, all right? Don't let them fool you with that. We're going to do expenses here. First expense was salaries. And we're looking for stuff that says expense because we don't want salaries payable. That's a liability. Supplies expense. We don't want supplies, we want expense. Now we want the depreciation of both the building and the furniture. I put accumulated depreciation, didn't I? We need to be careful about that. Depreciation expense for building and furniture. And then our advertising expense. Whoa, too much. Too much advertising expense. Don't do that. Total expenses. Let's close this out for a minute. Look, they left that line blank. This what they do that on purpose to see if you know what you're doing. Okay. So let's do this. We need to calculate our total expenses. I'm wondering if this is a loss. It's going to get close. Yeah, it's a loss. 49.3. I don't know why. So I've taught out of two different books, and I noticed Pearson's fixation with showing that you got a loss, whereas the other one I did had a fixation like you never got a loss. It's kind of funny how that is. Okay, there's your income statement. I'll let you pause it if you need to right here and kind of follow through with what you need. Statement of owner's equity. We're starting with our beginning balance. That's what's on our adjusted trial balance. Is our beginning balance for 62,200, unless there is something told to us in the bridge here. But it says, assume there were no owner contributions. That tells us that that is our beginning balance. Okay, then we're gonna do less with our loss, net loss, and then owner withdrawals. So both of these are going to be a reduction. And then our withdrawals was 16.5. We get that from here from the adjusted trial balance. I know half of it's not there. Whole withdrawals, right? That's coming from here. So now we've done all of this. It's done. All we're gonna do is take this balance to the balance sheet. Everything else, all we're gonna do is just say, hey, we have this account, it's this much. That's all we're doing. So easy. You just have to trust me. Trust me. Trying to do that in Arnold Schwarzenegger's voice. 38,900. Like one of my things I used to do when I was younger was listen to using soundboard on the internet. It's so funny. Had I had Arnold Schwarzenegger doing like calling people and he's like, hey baby. It's so funny. Don't do that though. Don't make phony calls. That's what Weird Al says. Okay. Okay, so structuring, okay, it's already here. I was looking for just assets. It's not there. So we're looking for current assets because we're doing a classified balance sheet. So what we need to do is we're going to look for all of our current assets. This last line right here is going to be our total current assets. I know that because it's indented out like this right here. So let's start here. The first one I know is cash, and it's always a current asset. What else do we have? Accounts receivable, supplies. Those two are, yep. Accounts receivable, supplies. What was the next one? Land. Is land a current asset? No, it is not. Land is long-term property, plant, and equipment. So what we're going to do now is we're going to list the amounts. 15,800, 14,500, and 6,400. Years are going to be different. I'm going to add these up using my calculator. Okay, oops, I guess I need to hit enter. There we go. 34,700 is our total assets, current assets. Then we're going to come over here and select either, okay, we're going to go with property, plant, equipment. Sometimes it does say long-term assets and, it's not horrible, but it's not accurate either. So we're going to have land, building, the accumulated depreciation, and the furniture and accumulated depreciation. We're going to list our land first because it came first, even though you're supposed to list your stuff on your balance sheet in order of liquidity, which land should be listed last. But as I say that, maybe that's only for our current assets. I don't. I have it in my head when things are supposed to be away and they don't always go. Furniture, and then I'm going to do building, just because that makes sense to my brain. And we're going to do accumulated depreciation. Make sure you match up the furniture with the furniture and the building with the building. You don't know if Pearson's going to have a heart attack if they want you to list building first because it's technically listed first on the adjusted trial balance. I don't know. We'll find out. If it yells, it will know for sure. Land was 18.6. Furniture is this 48,500. Then we're going to show us reduction for our accumulated depreciation. And then we want to do, I'm going to bring this calculator off screen. We're going to take the amount of the furniture, subtract out its accumulated depreciation so we know what our book value is, My book value is 12,000 for the furniture. For the building, it was 17,600. Accumulated depreciation is 12,900. My book value is 4,700. Then we're going to have our total property, plant, and equipment. And what we're going to do is we're going to add the land, the book value of the furniture, and the book value of the building. 35,300. Then I'm going to add the total property, plant, equipment along with the current assets. If I had any intangible assets at this time, I would also add that as well, but we don't. So I'm going to click here, 70,000. That's the total, and this is total assets. We are done with the asset section. Uh-oh, what did I done wrong? So it did not. Oh, did I reverse it? Oh, I did. I did reverse it because I reversed it. See, you guys should have told me that. So 47. Okay, so 12, 47. So what it did was, well, just make sure when you, I told you to make sure you line these up. Also make sure you put the right numbers in here. So, and I did put this as a negative too. So that was not good of me. Oh, whoa. I did the wrong one. Well, I guess it is. Okay, so I'm going to do this minus 36,500 and hopefully it saves it and lets me paste. If not, that's going to suck. Yay! All right. There we go. Put those in the right spot. Now everyone's happy. Now we're going to do liabilities. See, remember I told you guys I did furniture first, but then I went down here and put these in the wrong spots. That's why that was wrong. So now we got are these three liabilities here. Now, accounts payable is always a liability. Salaries payable, current liability. Unearned revenue, more than likely current liability. So we don't have any long-term liabilities here. So this one will be kind of easy. I'll keep them in order this time. I won't get crazy with it. So current liabilities, remember, there's always this liabilities section. Sometimes they make you put in there, sometimes they don't. Accounts payable, salaries payable, and unearned revenue for the amounts of 10,200, 7,900, 13,000. I haven't played Minecraft in probably like 7 or 8 months, and I'm having withdrawals. I keep having dreams that I'm in Minecraft, so I think I gotta hit some up one of these days. All right, I got 31,100 as far as our liabilities. Then we have our owner's. Oh, let's label that total current liability. May I actually want us to put total liabilities. I'm going to put total liabilities because even though we have a current liability section, because we don't have a long-term section, this is also, while both are current total, it's also our total liabilities. And I think Pearson wants to say total liabilities. I don't like that. I hope I'm wrong, but we'll find out. Here we go, whole capital. We're going to come right back up here and see that we got 38,900. And then we're going to come here, total liabilities and owner's equity. And if we add these two together and it equals 70,000, then we know at least our numbers are right. Bingo. Makes me happy. Now let's see if I labeled that correct. See if it yells at me. Nope. See, I think if I put total current liabilities, it would have not liked that. It's not like it all. Why didn't I finish these ones? Oh, right. Okay, I remember. Okay. I hope this helps you guys. If you have any questions, please ask in class. That is the best way to get the answers to any questions you may have. But otherwise, we'll see you later in another video.